If you want to maximize this crypto bull run, then you need to be in the right altcoins. But you've come to the right place, because in today's video, I'm going to be breaking down my entire crypto portfolio to help you succeed this cycle. I'll be giving you a breakdown of each sector that I'm invested in, from AI to meme coins to gaming, give you the list per sector of each individual altcoin with their percentage weightings to help you manage risk. It's going to be an absolutely massive video and an alpha-packed show for you guys to help you navigate the crypto market. And hopefully within this list, maybe it changes your mind on a few theses in the market, or even maybe I give you a new altcoin that you don't know much about and it can prompt you to go off and do your own research. So let's lay out the land in terms of the structure of today's video. So I've broken this portfolio down sector by sector. I believe that taking a sector approach to the market is super beneficial, as it allows you to easily navigate percentage weightings across your portfolio and make sure you're capitalized in the right narratives that are strong in the market. It's clear that so far this bull run, certain narratives have outperformed. If you were in some of the older, less popular trends from last cycle, you'd be caught underperforming versus those with their portfolios more heavily capitalized in sectors such as meme coins, AI, etc. So in today's video, I've broken it down into infrastructure. So this is L1s and L2s. You can see the coins with their theses, and all the price data is hidden. I'll be revealing this as we go through the list. AI and DePin, meme coins, gaming, RWA, DeFi, and at the end of the video, I'll be breaking down the unreleased projects that aren't even out yet that I'm also eyeing that interest me this year. Let me just give you a few words of disclosure that went behind this video before we get into the exact altcoins here. Firstly, this is completely subjective. This is based on my opinion, and I did have to condense things down. So I didn't want to do 100 altcoins in today's video. There were some alts which I hold, which didn't quite make the list, but I'll go through my logic a little bit with some of the exclusions as the video goes on here. If I did miss anything, let me know in the comments below. I love to hear what you guys hold and you're convicted in terms of your portfolios as well. The other thing is, of course, this video is not financial advice. It's for entertainment purposes and it's based on my experience. You obviously should do your own research before you invest in any coin in the crypto market. And the other thing is, these weightings are merely suggestions. I will break that down as the video goes on in terms of my thinking behind how I weight my portfolio. But you must remember that your portfolio weightings and the exact risk tolerance that you approach the market with does depend on your own financial situation, your income, your ability to handle risk, your emotions, etc. If you're a trader, or more of a long-term investor. So it's hard to implement a one-size-fits-all approach, but hopefully the numbers in today's video do help you get a little bit of a gauge as to how I view the market. So before we dig in here, if you do want to trade any altcoin on an exchange that doesn't have mandatory KYC, you can use Blofin using the link in the description below. Trade altcoins, but also get access to the nice sign-up bonus that we've currently got going on. This is available for another 2 days at the time of posting this video. After this video is uploaded, we'll roll out a new campaign, so just check the link in the description if you're watching this slightly later, and we'll have the new offer available at the time in the description below. But right now, it is a $30 futures bonus that you get for signing up and depositing any amount. And then once you've deposited, you can also unlock additional rewards like another $20 bonus alongside bigger prizes like AirPods, a Nintendo Switch, an iPhone, MacBook Pro, Apple Vision Pro, Rolex, and much, much more. This is available until May 12th. And at the end of that period, you will obviously get the bonus credited to your account if you signed up and deposited using the link in the description. But we will update this based on the new campaign that is live after May 12th. So without further ado, let's get stuck into this video. Let's reveal the first altcoin here, and I will go relatively quick through each of the altcoins. I don't want to spend too long per coin because we have a lot of coins to get through, as you can see on this list. So let's get straight in. Ethereum, obviously, it's part of my portfolio. One of the core reasons why it's a part of my portfolio is because I do denominate a lot of my trading in ETH, especially when I do trade on chain, meme coins, etc. So I always like to hold a decent amount of ETH. It is the leader of the alts. It has been underperforming, unfortunately, so far this cycle, but I do think at some point, despite a likely ETF rejection this time around, we do see some sort of institutional narrative behind Ethereum, and I do believe with the current deflationary mechanism that we at some point see a supply squeeze. I don't know when it's going to happen, but it is in my portfolio because I believe we eventually do get it. The next one in my portfolio is Solana. You'll notice I've attributed the same weighting to my portfolio as Ethereum because Sol has actually been the play this cycle. It's been the infrastructure play. It's one that I called at $12 to $14 on my Twitter and also on my YouTube, and one that has outperformed in my portfolio, and I'm sure a lot of your portfolios. This is the Solana chart versus Ethereum, and you can see that it's currently teetering with the initial highs that it made during the bull run mania of November 2021. If it does break through here, I can see it only gaining more ground versus ETH. So Sol flipping ETH is becoming a lot more of a possibility, as it's really breaking the barriers as to what we could consider a successful chain in crypto, gaining a lot of adoption, having significant mind share, which obviously has led to massive user and metric growth. But the number one thing that's been propelling Solana's growth is the fact that it's viewed as the ultimate casino. So just like you have casinos in Las Vegas, and then you have, the roulette table, the blackjack table, the poker table. Well, Solana is the casino, and the meme coins are the individual games like roulette and blackjack. And the Sol token itself is like the chips at the casino. So that's really been one of the reasons why Sol's been growing so fast. But I'm going to be pretty critical here. Not a lot of L1s you can really say have been a bona fide success to this date. Okay, I would say Ethereum, just due to the metrics that we have and how long it's lasted. I mean, it's been almost 7 years now. But Solana's really one of the only other blockchains that's launched and actually been able to gain some sort of network effect versus a lot of the other L1s, which despite having some decent metrics, are largely falsified in terms of their real user base. So moving on from Solana here, and you will notice I've weighted these coins from the biggest weighting to the smallest weighting, and typically that also corresponds with the market cap. So typically I will weight heavier towards a larger cap token, and I will weight less towards a smaller cap token, with the exception of a few coins that I have higher conviction in that I've decided to take a bet on. Some of those are later in today's video. But going on with this theme of infrastructure, so the L1s and the L2s, the next on my list is TON. Now, TON has been quite an impressive one in terms of its rise to prominence. We recently saw Dan Moorhead come out and say that 99.9% of blockchain projects are just a tech idea trying to create a community from nothing. There are 23,000 cryptocurrencies. That's a hard road for most. Telegram is a community integrating blockchain technology that's going to be a lot easier getting users to use the blockchain when you already have an existing user base versus trying to gain users with no existing community. So the argument that he's making here, and one that obviously prompted Pantera's the biggest investment, according to Dan, that they've ever made, investment into TON, is obviously the 900 million users that the Telegram app has access to. They've recently integrated USDT. They have revenue sharing from their ads program directly on chain, now enabling creators to withdraw using the TON blockchain. There's also rumors of an upcoming IPO for Telegram, and it's a relatively nascent ecosystem. So although the price is quite high, now in the $7 range, when you're watching this video, it might be anywhere between $4 and $15, because we know this market does some crazy things in the shorter term. But we know that it's relatively highly capitalized, around a 35 billion valuation. So one thing I'm digging deep on right now is the ecosystem. Going to be doing a video with my top ecosystem picks on TON, because I think there's an opportunity there. So make sure you are subscribed and hit that post notification bell if you haven't already, because I try and get you in early to the new narratives. And TON was one that I was able to get you guys early into. OG viewers of the channel, not even really OG, because it was just a couple of months ago, know that I did my first dedicated breakdown of TON when not many people were paying attention to it at around $3.50. It's obviously doubled in price since then. So TON is one I've got conviction in, comes with a pretty high premium attached in terms of its valuation, but a relatively safe bet, at least as safe as cryptocurrency gets. The next one in terms of infrastructure here is Near. Near is really aggressively positioning themselves more towards being an AI proxy. I mean, they did have the whole sharding narrative and the L1 trend last cycle. They were obviously one of the first blockchains to actually implement sharding. Ethereum's kind of gone down a bit of a different route in terms of its scaling via L2s, but Near is becoming more synonymous with AI. They've recently been teasing a new upgrade in the AI realm powered by chain abstraction. You can see they've got all sorts of funny branding going on right now, so they're clearly leaning into the AI trend. But apart from AI, because we know the founder Ilya actually had his roots in AI before he went into blockchain, Near actually is exhibiting some nice growth in terms of daily transactions. So the network seems to be gaining a little bit of hype and traction, and I think it is a decent one to add not only to your infrastructure/AI portfolio, but just in terms of getting a little bit of a hedge against EVM. So when I say that, I mean, look, a lot of the market right now is surrounding EVM. So you've got Ethereum, which is obviously an EVM chain. Then you've got Phantom, AVAX, which are EVM, your L2s, Arbitrum, Optimism, all EVM. And that's fine. And there's a lot of wealth and wealth effect on the EVM chains. But I also think Solana was a great example of a non-EVM chain succeeding and creating a niche and a community for itself. And I do think we need other bets in our portfolios to spread out from becoming too EVM-centric as a hedge, for lack of a better word. So that is why Near is also in my portfolio alongside the clear AI ties. The next one that I'm putting in for similar reasons is Sui. Sui has also been gaining traction in terms of users and active addresses. The one thing that sets Sui apart is, of course, the Move programming language, which makes it easier for developers to program applications on chain. It's a major selling point, and I do prefer Sui versus Aptos. I won't go too much further into that one. Both of them are being assigned a 2% weighting in my portfolio here, and then at the end of the infrastructure section, I'll give the overall weighting. One thing that I've also got at the end of this spreadsheet is a pie chart with all of the sector weightings actually outlined for you. So at the end, I'm going to reveal that, and then we'll talk a little bit more as to my thinking behind the percentages outlined in this portfolio. And I'll also be answering the question of when to buy. So I'm sure a lot of you will be thinking throughout this video, is it too late to buy these coins? Is the time right? Are they going to go down further? All of those questions I'll be answering towards the end of the video where we summarize this portfolio. And for everyone in the Mars High Club, by the way, which is my private Discord community, you will get access in the alpha channel to the full PDF version of this spreadsheet that you can save and use as a resource when you're doing your own research or building your own spreadsheets. So that will be available in the alpha section for all of the members there. To anyone asking about how to join the Mars High Club, because I was getting some comments in my previous video, unfortunately right now the waitlist is closed. As soon as we open it back up, you'll be the first to know if you are subscribed on this channel and have post notifications turned on. Moving on from Sui and Near, the next one I've got here is Injective, and I'll reveal two at a time alongside Tia, two coins that were really leading the initial thrust in January 2024, but have recently started to stagnate a little bit in terms of price action. Speaking on Injective, they're both assigned a 1.5% weighting here. It's got a strong community. Its tokenomics are quite strong in terms of the burn mechanism that's implemented. And another thing that I want to point out here, which is definitely a plus for Injective, is you aren't experiencing a crazy amount of unlocks. So it's pretty much fully diluted in the market. There aren't many VC unlocks dumping on your head like a lot of these other new coins which have been down only. So I'm starting to favor these types of coins in the market that have a lot of their supply already circulating, because I'm noticing from a price action perspective, a lot of these are actually performing better. Now, of course, there are exceptions because tokenomics is not a one and done thing. There's a lot of nuance where it comes to where the unlock's going, who holds the majority of the supply. Is it being used for community bootstrapping? Is it VCs that are getting the tokens that are dumping? So tokenomics are actually quite a complicated concept, but as a general rule of thumb, it is a good thing to see when a token is fully diluted from a pure supply perspective, because then you don't need to worry about, unlocks coming over the next 6 to 12 months that could potentially hurt price, especially if we do see any sort of downwards momentum at any point, any sort of sideways chop like we're seeing at the moment, the price is usually a little bit more protected there in terms of sell pressure. So injectives in my portfolio for those two reasons, alongside the fact that it does give me exposure to the Cosmos ecosystem, which I don't have much exposure to. And the next one is TIA, also one that gives me exposure to the Cosmos ecosystem. It's the leader in modularity. So I have all different types of scaling methods in here. You know, you've got NEAR that's implementing sharding. You've got ETH, which is more roll-up centric. Solana, which is a monolithic blockchain. I like having modularity in my portfolio as well because we've seen a lot of dApps have the propensity to incorporate Celestia's data availability to make their apps more scalable. So that's something that I want direct exposure to, and I can do it through Celestia. The other thing is it's also got quite a strong staking and airdrop flywheel. So basically stake the token, get access to ecosystem airdrops, and the flywheel goes on and on because the more airdrops that occur, the more buzz for the ecosystem, the more projects deploy, the more Celestia staked, etc. So that staking ratio climbing up is good for the supply dynamics of the token. There has been a little bit of supply coming onto the market, which has resulted in the price dropping around 50% from its peak. One could argue that it ran up a little bit too aggressively at the start of the year though. Now, moving on to some of the L2s. I don't have many in here, but I wanted to mention STX in particular because it is a layer 2, but it gives me exposure to the Bitcoin narrative. So the BRC20 narrative doesn't have many clear leaders right now. It's a little bit dubious in terms of what end up being the front runners in that sector. STX is the clear one for me, and they also have recently conducted the Nakamoto upgrade, which has been to a great benefit for the network. The next one is Base, and this rounds out the infrastructure section of this portfolio. Base doesn't have a token that is currently live, so unfortunately, you can't buy it right now. However, what you can do is you can start positioning yourself in the ecosystem. So one thing I've started doing actively is searching for projects in the ecosystem, meme coins in the ecosystem. There are a lot of new dApps deploying, and that's one of the reasons why I am so bullish on Base. A lot of projects that I speak to say we're deploying on Base. A lot of projects that are on other EVM chains are also migrating to Base. So the ecosystem is developing quite rapidly. And of course, like Telegram, the Base chain does have the benefit of having an application where it can benefit from direct user flows, aka users of the Coinbase exchange can easily off-ramp to the on-chain version of Coinbase, which is, in a way, the Base L2. So that is also a massive plus for Coinbase in general, and that's why it's here on the list, even though they don't have a token yet. Will they have a token in the future? If I had to bet, I would say yes. So if you use the network, you may get access to an airdrop, but that won't probably be ready by this bull run, at least not in my opinion. So it's best to focus on the ecosystem. And that's why I didn't assign it a percentage, because it's very hard to quantify once you start getting into the ecosystem, but you've got to weigh up, how bullish you are in those individual tokens. And you'll notice here, I have a microcap section, and this will be a common theme throughout this video as we get through the sectors. I always have some sort of weighting specified for the lower caps. So you'll notice here I have majors, large caps. I don't have any mid and small caps like I do in some of the other sectors for infrastructure specifically. But what are microcaps? They're essentially, bets on new chains. Maybe it's an interoperability layer, something novel in the infrastructure / L2 sector that I want exposure to, but I'm not bullish enough to either put it in this direct video, or maybe I don't even know what it is yet. That's where the microcap section comes in. You can see here that I'm weighting 28% towards the specific altcoins in the sector, but I also want some exposure to other stuff. So that's why I've bumped up the weighting by 5% to 33% to give myself some ammunition to gamble on the microcaps. And this could be, 4 or 5 projects that I'm just punting on. And the microcap section, typically I'm willing to just lose completely. Like, this is gambling money, basically. I'm fine if I lose it, but it gives me that potential exposure to coins that can pull, 20, 50, 100x's in the height of a bull run, whereas Solana may only pull a 5 to 10x. Ton may only pull a 5x. Sui NEAR, maybe they can go up more, but maybe only a 10x. If you're very, very, very lucky, maybe a 15, 20x. I'm not sure we get that across all infrastructure this cycle, but even if we did, then a lot of the lower caps are obviously going to 100x under these individual sectors. So that's why I want to direct a bit of my ammunition towards these smaller cap tokens. All right, so that is the infrastructure portfolio. Let's move on to AI and DePin. And these are the narratives that I'm most bullish on, by the way. In my videos, I talk about this a lot. AI is a vertical which I think is going to perform really well this cycle. It's already a leader, but I think if we do go into a more aggressive bull run, it should be one of the leading sectors. Meme coins as well, they've been leading this bull run. Gaming has been slow, but I do expect gaming to really pick up with some gaming-specific catalysts coming over the next few months. RWA as well. So we got some really exciting stuff and some really exciting coins to discuss in today's video. So let's keep moving on here. The first AI/DePin coin, and I am combining the two because they do go hand in hand. DePin is typically one of the ways to democratize access to compute, which AI needs, and a lot of the AI coins are actually DePin coins. That's why I'm putting them together here. The first one I want to mention is Arweave. This is definitely one of the leading DePin plays at the moment. It's one that I've been discussing for quite some time, even back in the OG days when I was streaming on Banter. They recently just announced their supercomputer, which is absolutely massive. It's its own, basically, the way you can think about it is like a layer 1 network, but with incredible tech behind it that's going to facilitate dApp deployment, AI applications, etc. It's also one of the oldest DePin projects in crypto, so it's been around a while. The team's very smart. They've continued to ship, which I like. And fast storage is a huge upside industry. And Arweave specifically doesn't have much dilution and also has airdrops for users of the network. So Arweave comes in at a relatively generous weighting of 3% within the AI DePin section of my portfolio. The next one is Render. Render is pretty much the leader of the AI narrative. We've seen it be super responsive to rallies in the AI sector, and it's one that I've been talking about since Render was just a couple of dollars back in November 2023. They've also got the Apple partnership, which typically gives it a little bit of hype into major Apple events like WWDC, where they announce new AI products like the most recent one we got. So Render's one that continuously crops up, and this is one of the best things about AI. News flow from the real world tends to impact prices. So you can pretty much bet on any AI coin to get access, because a lot of them are proxies and maybe aren't even purely AI. Like Render's, for example, is a DePin play. But I have tried to narrow it down into the alts that fundamentally I'm most bullish on in terms of accumulating spot. But I do trade a lot of other AI coins that aren't in here. For example, FET, Ocean, Adjix, they're not actually on the list, but I do actively trade them into major AI events / real life catalysts. And this is one of the reasons why I love AI, because it continuously crops up as a top narrative and has outperformed for that reason. One that I recently added to my portfolio, longer time viewers of these videos would know that I haven't talked about Tau much before. And I wasn't really that bullish on it. I'm still not crazy bullish on it, but I did add it to my portfolio because I thought after the recent sell-off, it's down around 50%. It's at a major support level, so you do have clear invalidation below if you are a trader. For me, I prefer just to average in it and play the spot game a little bit more. There have been some issues that have pointed out about the sustainability and the incentive mechanism of the network. Those issues still stand, but it's become more attractive. It's pretty much retraced all of its move. But I think you can date it back to now, the beginning of January this year. So it's one that I added for that reason. And I think if AI does have a run, as one of the only liquid, bona fide network plays, it's an AI network. A lot of these other applications are just dApps. I think there is definitely a compelling narrative behind it. And I know it has a strong community. So I added it to my portfolio alongside Render. The next one, which I have been more bullish on and have been accumulating for a longer period of time, is AOS. So AOS also comes in at a 2% weighting. You can tweak these weightings if you like, but I tried to keep it roughly reflective of how I would position myself, but it really depends on your risk tolerance. AOS, despite it being a mid-cap, unlike Render and Tau, which are large caps, mid-cap in this instance is something under $1 billion worth of valuation, it does get that bump up to the 2% weighting just because I really like what they're doing. They have a great team. There's not much dilution because it's been around for a long time. They've been building throughout the bear, and they've recently shipped some amazing new products, one of which is their AI decentralized computing ecosystem, which allows you to train AI models, store data sets, build dApps, monetize, and contribute to the future of AI. It's called W3 AI Vision. But what I like about AOS is it gives you a bit of diversification across a few major DePin AI verticals. So obviously AI compute, but also data storage, Web3 streaming, and they've got their nodes which is their reward system powering the ecosystem. So I do like AOS. I like what they're building. They're shipping a lot of cool products, and price-wise, you'll notice it's actually held up pretty well, which is typically a good sign of relative strength during these market conditions. The next one that I've also been accumulating is Ator. Ator is an AI and DePin proxy, so it pretty much covers both narratives. It is a DePin play because they have their hardware, the Ator relays, which allow you to provide anonymity to your network. So it's a physical device where you earn rewards, but also keep your network secure, which is really, really cool. But the reason I also consider them an AI play is because they've been partnering with a lot of major AI/DePin protocols to give themselves exposure to that niche. So one of the really impressive things that I've noticed from the Ator team is a lot of very strategic BD across the entire ecosystem, and these partnerships, I think, hold them in good stead going forward. So AOS is one that I like. It's also down a decent chunk from the highs. I know a lot of coins are down, but typically that does represent opportunity when you believe in the fundamentals of a coin, but it has experienced a drawdown. At least that's the way that I've tried to position my own portfolio, taking advantage of those major dips, and then you can enjoy some profit taking on the pumps. The next one here is RSS3. It's another AI protocol. It's actually an indexing platform for AI data. Technically, it's a blockchain using the Optimism stack. They have a Google partnership and near data availability integration, which was recently announced. Their mainnet also just went live, and it's one that helps me get some exposure to the mid-cap region, like this 250 to 500 mil valuation range, which was missing in my portfolio. Ator is actually slightly below that at the moment, and then the other ones are relatively fully capitalized. So RSS3 makes my portfolio for that reason, alongside the fact that I just like what they're doing from a technology perspective. And then I've weighted 5% for the micro caps. So as I mentioned before in the infrastructure section, I do like to reserve some percentage for these micro caps, and actually AI has a lot of upside in terms of these micro caps. Now, I'm not going to talk about them today because a lot of them I don't have that much conviction in. I'll be completely honest. The ones that I've listed here, I have conviction in fundamentally. Some of these micro caps are absolute trash. Some of them aren't even AI. They're just using the AI narrative as an excuse to kind of get some decent price action, right? But the reality is it works. And if AI goes into a big AI blow off top run, like I think it can, then a lot of these microcaps are going to absolutely explode. So it's really not hard to find them. And maybe one day I will do a smaller cap video. If you do subscribe and hit that notification bell, I'll have to put a lot of disclaimers on though, because you can get wrecked when you play the small cap game. But what you can do is you can scroll down to like this sub 200 mil region on CoinGecko, CoinMarketCap, and just start researching these protocols, see if there's anything decent there. Once again, not going to mention them today personally, but they are there, and some of these can pull massive multiples, and this is something that I actively do. I share most of these small caps though, and I will be sharing going forward in the future in the Mars High Club, which is my community, because there's much less people in there. It's an exclusive community. I think we only have 1,000 people in there versus these videos which get like 40, 50,000 views, sometimes 100,000 views plus. So I think you can understand why I prefer to do that in front of a smaller audience. So the microcaps round out 5% of the AI portfolio. Now let's get into meme coins. Clearly, memes have been the leader of this crypto cycle so far. We've seen coins like Whiff, Bonk, Pepe, but also some of the lower cap memes pull huge multiples so far this cycle, and I don't see memes slowing down. It's almost been a paradigm shift in 2024 for the way that people view meme coins in the market. It's almost the anti-VC remedy that the retail audience has been craving, and I really don't think you can fade memes given how strongly they have been performing this cycle. So you'll notice here the allocations in terms of percentages that I give them outweigh a lot of other products which you may think are more credible, like Nia, even Ton, AR, Render, etc. But the reason I've done that is because I just can't fade relative strength in this market. Now, the first one is Whiff, coming in at a massive 5%. It's kind of interesting. There's this theory going around, and I'll reveal the second meme coin as well to make this point even more clear. There's this theory going around that Whiff is basically a better proxy to Solana itself, and Pepe is a better proxy to holding Ethereum directly itself. Now, at first, I kind of dismissed this, but the more I think about it, the more I believe it's true. They are outperforming on a higher risk beta to Solana and ETH respectively. But I also believe that relative strength wise, they actually look better than Sol and ETH as well. So we'll see if this relative strength holds up if the market continues to chop. But I still believe in the thesis that if we go into a more bullish market, WIF and Pepe should outperform. You've got WIF as the leading meme on Sol. Anthem's obviously pushing it. It's fresh. It's a dog with a hat. People like it. It's this kind of new, fresh meme coin compared to Doge and SHIB. Then you've got Pepe, which is unique because the Pepe frog itself is actually the strongest meme on the internet when you think about it. And this is one of the things that stood out to me when it first launched, and I was talking about it before. I think it pulled like a 50x last year. It was absolutely mad trading that in the early days. It was a lot of fun. But it's the strongest meme coin in real life, right? Pepe the frog. So there's definitely a strong reason behind why it should outperform and why it has outperformed. And that's why I've given it a 4% weighting, which may sound crazy, but this is pretty much the left curve play of the cycle. If you are a complete lazy person and you don't want to put any effort into the crypto market, but you want to make decent money in a bull run, probably the easiest thing you can do is just allocate to meme coins and go away. And if you're going to do that, you can't really go into the small caps or even the mid caps because they aren't solidified. A lot of the time, just going to like the solidified memes from a risk reward perspective is the better play. So you could literally just buy with Pepe, kiss the market goodbye for a few months, come back when they're significantly higher and take profits. Like that's honestly, it sounds silly, but that honestly for a lot of people will probably work. And that's the ultimate left curve to the market. The next one's PopCat. The reason it's in my portfolio here is because it's the leading cat meme. The community's strong. I think that's been proven over the last few weeks. People like dogs, but there hasn't been much love for cats, so I wanted some cat exposure. I'm just going to reveal all of them right now, actually. Front run a little bit. The next one's Foxy. I like Foxy because it's basically a linear proxy. So just like we talk about betting on the leading Solana meme in WIF, betting on the leading ETH meme in Pepe, Linear is a new ecosystem which should receive a big catalyst later in the year in the form of an airdrop, which is underrepresented currently in terms of the ability to trade a liquid token. There's no Linear token, there's no consensus token, there's no MetaMask token. There's not many bets on the Linear consensus MetaMask ecosystem that are currently live apart from Foxy. So I think it's powerful for that reason, and that's why it's in my portfolio here as well. Also, they're doing airdrops to the community, etc. And I just want some exposure to Linear. I do think what Linear's building is very cool, and I just want to back consensus without being able to directly back them. So Foxy is a way to do that, and we know memes have been acting as, higher beta proxies to the underlying chains themselves for quite some time, and I don't think that's going away this cycle. The next one's Gummy. Gummy is one that was birthed by the Banter community and has been pretty strong compared to a lot of the rest of the market. My thesis here is pretty simple. Don't fade the Banter community and don't fade RAM. We know how strong the community is. Go look at Crypto Banter. In a bull run, they get the most views, 150, 200,000 per show. It's nuts. When retail comes back, I'm almost 100% sure Banter will still be the leader because RAN's just ultra consistent. The community is so strong and it's good content. And if you're betting on communities in crypto, that's essentially what meme coin trading is all about. Memes are a bet on community, and Gummy is basically a bet on the Banter community. And once again, don't fade RAM. That's kind of my thesis behind Gummy. Very simple, very to the point. You can put even Tuka. I'm not personally invested in it, but that's another one that the Banter community responds to as well. I think there's some synergies between the two. The next one is Puff. I really like what Jordy's been doing with Puff. It's been an awesome experience to be a part of. I talked about it day one. Everyone that's been participating, I think you should be doing pretty well if you've been active in the initiatives on Puff, but that is one that also makes up a percentage of my meme coin portfolio. I think the gamification has been genius and a lot of cool game theory. I've honestly just really enjoyed being a part of it. Like typically with a meme coin, what you'll do is you'll hold it in your portfolio and you won't do much. Whereas Puff, there's been games to win more Puff. You can stake it. There's game theory involved. And I think as the chapters go on, with chapter 4, 5, 6, it's only going to get more interesting and there'll be even bigger decisions at stake. So I like Puff for that reason, but I'm also excited for what's to come there. You can see here the sector weighting comes in at a massive 20% compared to infra at 33. Infra should technically dominate, right? Because it's infra. And it does, but on a relative basis, that's quite a high weighting for meme coins. one of the reasons why it jumped up is obviously because 5% is to microcaps. Now, what microcaps should you invest in? Well, meme coins are unique to other narratives because they are very cyclical. So during a meme coin season, you can actually do a lot of active degenning into these smaller caps as they launch and hit these big multiples. Sometimes it's good to just reserve some stables because not all the leading meme coins will be apparent right now. For example, in March, when Solana meme coins were going crazy, people that were just investing in these newer memes were making like 10, 20, 50x. I've got video guides on how to actually execute this, just entering and then exiting. So you do want to keep some stablecoin balance aside for when conditions turn into really positive meme coin favorable conditions, you can utilize those stablecoins to trade meme coins. Otherwise, you can just average into stuff that you find fun. Generally speaking, that's the way to go. And remember, meme coins are pretty much gambling. So just like the rest of the microcap sections here, you should be willing to lose most of your money here. I think WIF and Pepe are a little bit safer. Once again, I say safer because it's crypto, anything happens. Luna went to zero and that was, 100 billion FDV or something like that. But, on a relative basis, it is safer than a lot of these smaller microcaps. But I do want to play them and I do want to make money off them, and that's why it's there. But the sector weighting is aggressive compared to the other sectors, and you'll see at the end how it shapes up versus the rest of my portfolio. The next narrative I want to discuss now is crypto gaming. So I said at the start of the video, there were a few narratives I'm most bullish on. You've got AI, you've got meme coins, RWA, but also crypto gaming is one of the sectors that I'm most bullish on. And this is largely why I've taken the sector by sector approach to this video. I want to be capitalized most heavily in the sectors that I'm most bullish on. There are some great niches that you'll notice don't really comprise the majority of my portfolio, and it's simple. You can't hold 50 altcoins in this market. You can't hold 80 altcoins in this market, or 100 as much as I'd like to. You have to be a little bit more selective with what you hold. And narrowing it down into this sector by sector approach helps me hold the right amount of altcoins and also have the right amount of conviction dollar-wise in the alts that I want exposure to. Gaming fits this bill because I believe that there are a few specific catalysts coming. The launch of Gunzilla, which is a new game which is on PS5, Xbox, and PC. You've got the launch of many of these AAA titles now starting to hit the market after years of development. It's just a really exciting time to witness the growth and evolution of gaming. It started with these play-to-earn games. It's now getting much more advanced. The graphics are much better. And it's one that I'm super bullish on. And although it's been slow, I do think we see a very strong recovery from crypto gaming in the near future. I am expecting at some point we see an explosion. But it's one of these narratives, unlike AI, which kind of crops up every few months and outperforms. I think gaming, it typically just has like 1 to 2 big runs per cycle. It'll be one that runs hard, but one that you're going to have to be very patient with. But that's great because you can DCA, accumulate, whilst people aren't focused on it. And then when it comes back, you'll be really surprised. In a blink of an eye, a lot of these will reprice 5, 10x in a matter of weeks. So you've got IMX and Beam. These are my two infrastructure gaming plays. IMX because it has one of the strongest gaming ecosystems and partnerships. Beam because it's got a huge array of partnerships, but also a massive treasury, and they're releasing new games. For example, Forgotten Playland, which I was an investor in, and many more coming in the near future. So those two make up my infrastructure section. And I like to take a pyramid approach with gaming. So at the bottom of the pyramid is my largest outlay dollar-wise, and this goes into the infrastructure bets. Going up on the pyramid, a smaller financial outlay, but slightly more risky section is the gaming studios. So gaming studios basically produce multiple games to spread out and diversify risk versus betting on an individual game. And then at the top of the pyramid, these are the riskiest but more sparing bets financially, but these can also outperform. And these are the individual crypto games, which are generally slightly riskier unless it's like a AAA title, but typically have bigger profits in them if they do end up succeeding. The next bet is Prime, one that I've been talking about since just a few dollars. I think on this channel I mentioned it at $7, and I think also back in the day at $3 to $4. So it's now sitting around $15. It's obviously performed super well, but it ran all the way up to $30 at one point, which is crazy. But Prime is unique because it's a gaming studio, but it's also an AI network as well. It's got big backers, and there's real users actually playing the parallel trading card game. So Prime is almost an AI coin as well as a gaming coin. hits two verticals that I think could both simultaneously be performing really well in a bull run. That's why it's in there. Now, Ronin is interesting. This is the next gaming coin in my portfolio. It's one that I haven't talked about on these shows because I didn't own any, because I didn't really understand it. But over the last few weeks, I've been digging deeper into market correlation. And what I noticed is that Ronin, when gaming performs, is actually one of the strongest performers from a strength perspective. So for that reason alone, I put it in my portfolio because when we get a gaming run, I want to be exposed to the stuff that's responsive to the sector. And Ronin has exhibited this. It's also quite a fleshed out ecosystem, and it's coming at a discount from its highs like a lot of these other coins. So that's why I added it to my portfolio. The next one I added, and you'll notice the weightings are starting to drop just a tiny bit now, but I'm still quite bullish on it, is PYR. It comes at a decent valuation. There's not that much dilution, and it's a gaming studio, so it gives you exposure to multiple games. The next one's UOS at a 1% weighting, because it's a lower cap, so it's actually sub 100 million market cap, one of the lowest caps I'm mentioning in today's video. But I wanted to mention it because I think that there's something brewing there. I'm hearing a few rumors about a network upgrade. It's got a reasonable FDV. It's been established for a few years. Maybe a boring trade to some, but I think a lot of these gaming coins, when you do look at their charts, they've been bottomed out for so long, and they just keep bleeding and bleeding and bleeding, that at some point when we do see a gaming run, these coins that have flushed out all of their supply into the market can pop super quick. So US is on my list, and one that I have recently been adding actually. The next one is Aether Games. The launch from a price action perspective has been disappointing, but this isn't just exclusive to Aether. The entire new launch market, due to the amount of new launches and the lack of liquidity, to be frank, has resulted in a lot of these new launches, Starknet, Wormhole, Polyhedra, etc. underperforming. It's a really weird market, and I'm going to have to do a video on that in the future. But AEG is one that it does have nice catalysts still left in it. It's got the upcoming game launch, the Wheel of Time IP, which is a very popular Amazon series. Potentially more integrations coming for new IP as well in the future. So it's one that I've got my eye on. With these new launches that are bleeding, something that you can do, just a little bit of a tip for you, is essentially wait for that confirmed uptrend and then start averaging in instead of catching a falling knife. You can approach the market however you want, but that is a strategy for those who don't like to be underwater on a position, because you just may have to if you're trying to time the lows on some of these coins. It can be difficult. So my overall sector weighting is 11%. I don't have a microcap weighting just because there aren't that many microcaps that I've spotted in gaming that I love, but of course I'll ramp up this percentage as the gaming bull run starts to kick off. As soon as I start seeing the signs of a gaming run, I will capitalize heavier into gaming and take some money out of the infrastructure pool or potentially the stablecoin pool, which I'll reveal what percentage I hold of stablecoins at the end of the video here. So that's something that I'll actively do as well. Like, these percentages aren't set in stone. I will tweak them around as my theses change, as narratives evolve in the market. I don't like rotating and playing the hot potato game, but what I do like is rebalancing, based on strategic positioning in terms of market trends, because I don't want to be left behind if there is a trend that I see taking off. I will try and get some exposure to it, generally speaking. Now let's talk about RWA. Speaking of trends that are taking off, RWA has been one of the trends to establish itself in the market in 2024. But interestingly, there aren't that many strong altcoins currently available to trade in the RWA sector. So it made making this RWA portfolio really simple, because pretty much all I have to do here is long the leaders. The clear leader is Ondo Finance for the RWA sector specifically. One that I've also included under the purview of the RWA narrative is Link. Although it's technically not RWA itself, it is one of the most essential pieces of infrastructure to facilitate RWA, because you have real world pricing data, and then you have that data being reflected on the blockchain. For that to effectively take place, there needs to be an intermediary, aka an oracle, to make that happen. And Link does step in as one of the biggest, actually the biggest oracle in crypto. Another one that serves this role in terms of price data is Trueflation. This is one that recently launched. It's actually been showing relative strength as well. This is also an RWA/Oracle proxy that's actually backed by Chainlink, and they've also got some cool product shipping in the near future. So that's also a token that I hold under the RWA segment of my portfolio here. Touching on Ondo a little bit more, because I think you know a lot about Link by now. If not, just look at the thesis points on the right. Strong community, CCIP is massive, and Swift has been implementing it. On the Ondo side, it's been the leading RWA proxy. There aren't many competitors. It's got this BlackRock association narrative, and it's got its global market product, which basically tokenizes securities, which is launching soon. Larry Fink, the CEO of BlackRock, has been a big proponent of asset tokenization. Ondo clearly benefiting from this, and from a relative strength perspective has been holding up super strongly. And then we've got Pendle, which basically enables you to earn yield. It also can help you do this in the RWA sector. It's a relatively flexible product, so whether it's RWA, gaming, etc., they can import the yield, separate the interest, give you a way to have exposure to income-generating assets on-chain. They also have a strong mechanism in terms of the staking, where you can lock VE Pendle, and as a result, earn rewards, with 1/3 of the total supply being locked in VE Pendle. There aren't many microcaps in the RWA sector, so I haven't really set any aside, but the sector weighting is very similar to gaming, coming in at a 10% weighting here. Now let's talk about DeFi. This is the miscellaneous section of my portfolio because I didn't really know what else to call it. DeFi pretty much encompasses the entirety of infrastructure that helps facilitate decentralized finance. So you could argue a lot of products technically are DeFi products, but anything that didn't go into the infrastructure section, I've added here. The first one is Rune. This is, in my opinion, one of the strongest bull market bets if your pure play is optimizing for reflexivity. What do I mean by that? If the market goes into an insane bull trend, you want to be in the tokens that outperform. We know gaming, AI, these sectors should do that. But a token that historically has outperformed during pumps is Rune because of its tokenomics. Its reflexive nature due to how the Omni pool is constructed and the APR flywheel with the LPs makes it a very highly reflexive product. I won't get too much into that mechanism today, but I've done a lot of content on it in the past. It solves a market need, which is basically interoperable swaps on chain. For example, if you want to swap between Ethereum, Bitcoin to ETH, you can do that. Using the Omni pool, it'll swap 1-to-1 with Rune, redeem it on the other side to make a swap from Bitcoin to ETH, and voila. It's one of the only products in the market that can actually do that effectively today. Still, even though we've had new interoperability protocols launch, one other thing is it's battle tested. So it's had hacks, exploits, etc. It's been out for years. It's still working. People still love it. It has a community. Not much dilution. Ticks the boxes. The next one is ENA. This is a new one that I've added to my portfolio. I highly recommend you read this. It's the Athena 2024 roadmap article. Jose, who is one of the investors behind it, he's at Delphi. He says Athena might be the most ambitious project in all of crypto. The internet bond, internet money, SEX, DEX, liquidity layer, and eventually its own network, a product for DeFi, CeFi, and TradFi. Read this. Honestly, it did make me kind of bullish. It's super interesting. The TLDR here is that it's very reflexive because it reprices based on funding rates. So if funding rates are super high, it tends to perform very well. I'm talking about the ENA token. When funding rates are poor, it'll tend to perform badly. So ENA is also similar to Rune in the fact it is reflexive. In a bull run where funding's crazy, it should perform really well. Conversely, during a market period where we see downwards momentum, it could perform quite badly. But it's definitely one that I want some exposure to in my DeFi portfolio because it has that flywheel. There has been a lot of comparisons to Luna. I don't think it's as unsustainable as UST. At least that's not apparent yet from what I've read up about. But it does certainly have that positive flywheel effect in a bull run. There's obviously some risk involved, but I really think what they're doing is novel, and I'm not an early investor, but I'm a liquid investor in the product, like you guys are if you're buying it right now. The next one that I want to talk about is Dupe. This is one that I've not added yet to my portfolio actually, but one that I'm going to be adding soon. They're working on a restaking product, one of the first restaking products on Solana. That's reason one, and reason two is it's one of the top dexes. It did have a major sell-off post airdrop as a lot of the Jeters were flushing out of their position. But I want more exposure to Sol. So Sol is obviously 8% of my portfolio here. I'm very bullish on Sol, but instead of going all into Solana itself, I want some exposure to the ecosystem that could give me higher upside. So obviously the meme coins like WIF and other memes that I'll invest in under the microcap weighting here will become a part of that. But what I really want additionally is DeFi exposure, and Dupe gives me the ability to do that. The next one's FXS. Price-wise, it looks terrible, but there's a major misconception here. FXS stakers that hold VEFXS have been earning income. So if you've held it and compounded it for the past year, although it might say like you're 60% down, you actually have probably broken even just due to the fact you've been getting so many rewards. So I do think there's a bit of a misconception there in terms of what I've seen about the commentary surrounding price. But then talking about price, it does start to seem more attractive now that it's so beat down. Once again, with these tokens that are kind of bleeding, you can play two strategies. One, you can try and catch a falling knife. You'll have to be willing to go underwater. Or two, you can wait for that confirmed reversal. And I do recommend that for a lot of people that are a bit emotional in the market. There's no need to rush in and catch a knife. You can just wait for the reversal. Maybe you'll miss 20% off the lows, but you'll get in on a dip during an uptrend. One very simple way to play the market, just wait for an uptrend. So FXS is one that I'm watching. I've been accumulating a little bit, waiting for an uptrend. We'll probably accumulate more if that does happen. It is a DeFi powerhouse. There's a lot involved there and a lot of different moving parts. RWA, they've got their stablecoin, lending market, etc. The next one is Zero. This is a new launch. Also one of the lowest cap tokens here. I am an early investor, for full disclosure, in Zero Lend. The reason I'm putting it in here is because I believe it's starting to look a lot more attractive from a valuation perspective at around 45 mil FDV. Basically what it is it's an Aave competitor. So Aave basically in the market is a little bit of a dinosaur. It ships slow. They have a lot of prohibitive governance, which stops them from deploying on new chains. Zero is pretty much like the younger cousin, but super innovative, more rash, willing to deploy on new chains, suck up liquidity. It did it on Manta. It's doing it with Linear, Blast, etc. So I do like that about it, that it's flexible. They have 150 million TVL. The other thing to note is it's revenue generating. So it's making real income, which you can't say for a lot of other tokens. But it does come with some risks, of course. There's exploitation risk when it comes to money markets. That's typically why they're valued slightly less in the market in terms of market capitalization. And also, we just had an airdrop which had a little bit of backlash. So there have been a lot of the airdrop investors selling. And then you also have had some FUD surrounding it due to the airdrop, which I think some of it's unjustified. But that's probably something for a future video in terms of the state of the current airdrop market. I've got a lot of thoughts there. And then I do have a microcap weighting as well for DeFi to round out a sector weighting of 10%. Now let's go into the unreleased projects. Now that you know all of the liquid stuff, and then let's go into the weightings and answer that question that you're probably thinking, is it time to buy? I'll kind of give my outlook on how to actually approach accumulating these coins. In terms of the unreleased projects, I've listed a few. You've got Aethia, which is an upcoming DePin AI project, which I'm bullish on. I've talked about that a lot in the past. You've got Zion, which is a layer 1 that I recently invested into, which is the first L1 purpose-built for mainstream adoption through generalized abstraction. It's very cool. It's backed by Animoca Multicoin Circle, so it's got big backers behind it. Looking forward to how this develops. There's probably also an airdrop opportunity here, so follow them on Twitter and keep your eyes on them. But this is an upcoming token that I'm watching and I'm also invested in from an early stage. Then you've got Gunzilla and Nine Heroes. There are other games I've invested into, but these are very strong games. Gunzilla is probably the strongest candidate to be that AAA title that gets true crypto gaming adoption. It's very, very cool. Their first game is, of course, Off the Grid, and Gunzilla is the studio behind it. Nine Heroes also has amazing gameplay, big backers, and is one that I'm also excited for and recently invested into. But there are a lot more. I'm invested, I think, into another 20 to 30 early stage projects. I do want to do a video where I actually summarize a lot of these because a lot of them are building some really cool stuff. And then there are probably another dozen to 20 that I'm not invested in, but I'm just a fan of from an early stage perspective that I would love to buy when they launch. So I'm probably going to do a dedicated video on this. Make sure you subscribed and have that post notification bell on because, yeah, it's becoming apparent I probably should do a video just on unreleased projects. But for that reason, it's probably wise to keep some stablecoins set aside because there will be some stuff that enters my portfolio that is not currently liquid. Now let's break down the weightings. You can see in front of you my weighting by sector. Let me zoom in and make this even clearer for you. You've got infrastructure coming in at 33%. I think it's justified considering infra is L1s and L2s. They're the backbone of crypto. ETH, Solana, TON, NIA, SUI. What else did we put in here? Injective tier, like very, very, very important coins for the ecosystems. And infrastructure typically is responded to quite well from a price action perspective, especially infra that's gaining adoption and has traction, like most of the ones that I mentioned. DeFi comes in at 10%, RWA 10%, gaming 11%. These are some of the sectors that I'm specifically most bullish on. Meme coins at a whopping 20% because I refuse to not left curve this cycle. And AI coming in at 16%. Also an aggressive weighting, but it is a specific sector which I think outperforms. If you're someone that responds better to a list, you've got the list here that you can screenshot. Now I got to talk to you about the stablecoin section, and this will lead into the question, which is when to buy. I tend to hold more stablecoins than the average person. Right now I'm actually above 30% because I de-risked recently because the market's been a bit shaky. I'm looking to accumulate over the next few months. So I'll probably average some of the profits that I took back into the market. But me personally, I've just worked out as a human, I'm much more comfortable with a stablecoin weighting between 20 to 30% in that region relative to my total portfolio. So let's say I have $100,000 in all of these sectors. I would like to have $20,000 to $30,000 in USDT or USDC or both on the side. That's where I feel most comfortable. You have to work out based on your risk tolerance where you feel comfortable. How do I summarize this? You want to pick an amount that if the market pumps, you're happy, and if the market dumps, you're happy. Now that's a really hard balance to strike, and there's been times where it's been both ways. The market's pumped and I've felt resentful because I've had too much stablecoins, and then there's also been times where the market's dumped and I haven't had enough and I wish I had more to buy more. So it's all about picking the amount. For me, that's 20 to 30%. Some people go as low as 5%. Some people go as high as 50%. It depends on how you trade. And that's why the weightings in this video aren't a one-size-fits-all approach to the market. Some people will be much better off capitalizing themselves higher in stablecoins, lesser in stablecoins, but also some of you will be better as active traders. Some of you are better just set and forgetting the market. In fact, most people are probably better off just DCAing and holding, but some people also want to implement a mixed model. So this is what I personally do. I have, let's say, 80% of my portfolio for mid to long-term stuff, and then 20% is actively trading. I'm probably even leaning a little more aggressive than that with an additional subset of my active trading portfolio, part of my spot portfolio that I kind of play around with. What does that mean? Well, there's a percentage of my spot portfolio which I'm willing to shift around, have some fun with, etc. So I can't really give you an answer as to what percentage to assign to that. It really just depends on how you want to do it. It could be 80% spot, 10% leverage, and then 10%, play money where you just degen into stuff and play around. But that will obviously depend, as I said, on your risk tolerance. And to the question of when to buy, I think when it comes to building a portfolio, this traditional investing approach of DCAing into the market and building out a portfolio, the strategy here becomes quite simple. If you believe we're entering a bit of a lull period now, which I do, in a bit of a sideways market, but you do think at some point within the next 6 to 12 months that we go significantly higher, which I also think will happen, then what you can do is basically DCA into the strong coins on major red days, add coins to your portfolio on major red days that you want to add. There might be some here that you don't have exposure to, but you want to add to your portfolio. If the market chops for a few months, you have an excuse to start DCAing and building up that portfolio. It'll also depend on how much fresh income you have coming in outside of crypto. That will also alter your risk tolerance. Because let's say your portfolio is worth $10,000 a month, right? But you're making $10,000 a month from your job. Well, because you're able to essentially replenish, let's say, you spend $5,000 and you save $5,000 a month, because you can replenish half of your portfolio in a single month, you can take on a lot more risk than a person that makes $2,000 a month but has a $10,000 portfolio, because it takes them 10 months at a 50% savings rate to actually make their portfolio back, essentially. So it's a very interesting way of approaching the market, and the reason I'm talking about this right now is I think a lot of you have to think about the market in terms of time as well. So how long would it take me to make that money back based on your real job or income? If the answer is a long time, you probably have to go a bit safer with your weightings, right? If the answer is not that long, I can replace my entire portfolio with my month income, then you can go actually a lot more risk on, and these weightings will seem very conservative to you. You'll be able to go way more into meme coins and way more into these micro caps, right? So it really depends on how you value money, basically. So that's a little bit of nuance I just wanted to talk about, because it's a question that I hear a lot in terms of weighting portfolios. In terms of buying, one thing you can do is just average into the market. I did a video here about how to set up a DCA bot. I'll link this in the description below, because for those that don't really fancy timing the market at all and you just want to accumulate, maybe over the summer period, all you've got to do is set up a bot, put in the altcoins, and put an amount in, and it will do it for you every day. It'll DCA in and take the guesswork out. So I'll leave a link in the description to that video. That's something that you can actively do. If not, the approach that I've preached about on this channel for quite some time of buying extreme fear and taking profits on extreme greed is generally a good way to approach the market. So I'll show you this weighting section once again if you do want a screenshot. Of course, all of my members of the Mars High Club in the Discord will get access to the whole file that I'll post, and you'll have access to do whatever you want with it. Hope you enjoyed this video. Are there any altcoins? I hope you enjoyed this video. Let me know in the comments below, what altcoins are you most bullish on? You can put 1, you can put 2, put 3. I want to hear what you're buying, and there might be some gems which I've missed that I can do more research on if you leave them in the comments below. I want to also remind you that if you do want to trade any altcoins, you can do so on Blofin with no KYC. If you're watching this video, on the day it comes out, we have a $30 futures bonus if you sign up and deposit any amount, and then you can also win these prizes based on your trading volume. If you're watching it in a few days from the time of uploading, don't worry, there'll be a new offer for you in the description below when I know the exact terms and when that's live. I'll see you in the next one. Hope you have a lovely rest of your day. Peace out.